Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news the housing shortage distortion is spreading. US existing home sales volumes slipped back again in May on a lack of inventory for sale there, and that demand pushed up median prices very sharply to $350,000, which is 24% higher than a year ago and driven by fast rising prices for single family homes. The April to May price increases are a faster pace again, a 32% annual pace. This is a market that has gone Kiwi style, one that they see more closely over their northern border in Canada. Expect a renewed surge in house building there. And the Richmond Fed factory survey also turned in a rising indicator driven by shrinking inventories, growing order backlogs and lengthening vendor lead times. Many firms there are reporting skill shortages. In testimony before Congress today, Fed boss Jay Powell said US job growth should pick up in coming months and temporary inflation pressures should ease as their economy continues to recover from the effects of the pandemic. This confirms the Fed's view that inflation we see is temporary. While markets are nervous, they basically are buying this view. In China, their media is going all out to celebrate the 100-year anniversary of the Chinese Communist Party and virtually deify Chairman Xi. Even economic news is being distorted to tell the glorious story. But in its shadow, the central bank reformed the way banks calculate deposit rates, setting new ceilings which will lower lending funding costs. Many SOE banks lowered their deposit offers by up to 50 basis points as a result. Also not in the spirit of celebration, some international analysts are downgrading their China 2021 recovery estimates. And Taiwanese consumer confidence took a dip in May as the pandemic made an unexpected return there. But while this measure isn't back to its pre-pandemic levels, apart from this stumble, it has been on track to do that. EU consumer confidence, however, does seem to be making its way back to normal, which for them means there are still more pessimists than optimists. But the June result has that deficit at its lowest since 2018 and well above its pre-pandemic levels in 2019. We should also note that last night, New Zealand paused quarantine-free travel with New South Wales while they get their Sydney-Bondi cluster under control. Dangerous because it involves the Delta variant. The US Treasury 10-year yield starts today down 1 basis point at 1.47%. The price of gold starts at $1,779 an ounce, which is down $5 from this time yesterday. And oil prices have eased back slightly in the US to just under $72.50 a barrel, while the international Brent price is little changed at $74 a barrel. And the Kiwi dollar opens today back up at 70.2 US cents and another quarter-cent overnight recovery. Against the Australian dollar, we're up to 93 Australian cents, and against the euro, we're also firm at 58.8 euro cents. That means our trade-weighted index starts today at 72.7 on its way back to where it was this time last week. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.